Today, I want to tackle one of the most persistent and frequently asked questions by my subscribers. Where will Bitcoin actually top out this cycle? And let's be honest up front, most price predictions out there are basically guesswork. They often feel more like astrology than data-driven analysis, and that's why I've taken a different approach today. Instead of speculating, I'll guide you through 6 of my favourite on-chain metrics, each with a strong historical record for spotting previous cycle highs. Now, no metric is perfect, of course, but when combined together, they have proven remarkably accurate at capturing every previous peak. So let's dive into it. Now, here on the chart, we have 6 coloured lines, each representing a distinct on-chain or just market-derived estimate of where a cycle top could form. And they're all technical measures, and honestly, I could talk about each one of these on their own for a while. But for this overview, I'll walk through each metric quickly just to give you a sense of why it matters and what it's actually telling us. Now let's start with the factored terminal price, which is represented by this light red line. And this one's a classic in on-chain analysis. The factored terminal price is essentially a theoretical ceiling for Bitcoin based on cumulative value transferred across the network and Bitcoin's age. And historically, it's been very reliable at highlighting tops. It's basically a mature final upper boundary for Bitcoin's price action, and when price hits this level, it is usually signalled a majorly overheated market, and this alone makes it a metric worth watching very closely. Next is the coin value elevation, or CVE, marked by the dark red line. And this is my own custom metric, which is a time-scaled exponential extension of the coin value days destroyed concept. But in simple terms, it tracks the long-term price ceilings by adjusting for Bitcoin's age and the amount of value long-term holders are moving. And the CVE, just like all the other metrics, stretches upwards during that late-stage euphoria, capturing the full extent of FOMO-driven mania. Next, moving on to the 5 times balanced price, which is shown in yellow. Now, this might sound a bit abstract, but it's also incredibly informative. The balanced price itself blends the realized price, which is the cost basis of the average Bitcoin investor, and the terminal price, combining current investor sentiment with historical network valuation. And when you multiply that by 5, you get a speculative top projection that factors in both network fundamentals and short-term market optimism. And I've always found it a useful gauge for spotting potential overvaluation during the final stages of a bull run. Now the 4th line here is the 4 times adjusted realized price, shown in green. And this is a refined take on the standard realized price multiple. It uses a corrected realized price that incorporates the spent output profit ratio and transaction volume, and then multiplies it by 4. And the result smooths out the raw data to reflect the majority of coins that are being sold at high profits. Essentially, it acts as a network-wide heat gauge for profit taking. Next is the orange line, which is based on the 4.5 times multiple of the original coin value days destroyed metric. And this one measures the liquidation of long-held coins when they start moving. When dormant coins are finally spent, this metric spikes. And scaling it this way aligns historically well with major cycle tops, where long-term holders start selling during the euphoria price action. And finally, we have the delta top. This one again is very popular, but it's a bit more niche, but it's still very powerful. It's calculated as 7 times the difference between the realized price and a time-adjusted average market cap. But what makes it special is how consistently it coincides with the psychological blow-off tops. Those irrational euphoric surges that drive Bitcoin far beyond perceived fair value. But for most of the time, this line sits well above the price. But during a textbook blow-off top, it tends to be tagged right before a sharp reversal. So now that we've covered the individual lines, let's look at what they're indicating today. And on the right-hand side of the chart, you can see the predicted price levels for each metric. They currently range anywhere from 168,000 for the CVE estimate up to 267,000 for the delta top. And that's a wide spread, but this is expected during periods of range-bound, choppy price action that we've been seeing for a while now. And the divergence doesn't mean that these models are wrong, it just reflects that the market hasn't entered its parabolic euphoric phase yet. And when that phase arrives, these lines tend to converge very rapidly. If we look back at 2017 here, all these indicators clustered tightly just before the cycle top. But you might be wondering which line to trust the most. And the challenge is that following just any one of these lines could lead you to sell too early or too late, and that's why I prefer looking at all 6 of them together. So to manage these conflicting signals, I created a merged average line, which is the mean of all 6 indicators, offering a composite perspective on where the macro top might occur. And I've recently refined this indicator to include a decay rate factor to account for diminishing returns each cycle, which I believe has improved this massively. This line, which is shown here in green-grey colours, currently sits at $180,000, and historically it has captured every cycle peak, even as each peak has been slightly less intense than the previous ones. And it won't be perfect, and price could overshoot or undershoot this easily, but it gives a reasonable zone to start scaling out or planning your exit. And when we look back at history, this indicator has been highly effective. In 2021, Bitcoin repeatedly touched the average line near the top, and the highlighted red zones on the chart visually show us when prices extended above several of these 6 metrics. The brighter the red means the more indicators were exceeded, acting as a sort of multi-metric overbought signal. And in 2017, we saw the same thing. A strong confluence flagged the blow-off top perfectly. And in 2013-2014, Bitcoin surged past some of these lines before major corrections. But overshoots aside, these zones act as magnet points and help us plan exits without relying on our emotions. And if history holds, or even rhymes, we should see these lines converge again as Bitcoin enters an exponential phase. And my base case is that we should still assume that we'll get one of these. Early in a cycle, divergence is normal and widespread, reflecting sideways action or early rallies. But once we hit the vertical euphoric part of the cycle, the convergence on these metrics happens pretty fast. And when Bitcoin's price starts hugging the average line during the rapid upward moves, that's when confidence in a macro cycle top increases. And it's not just about hitting a number, it's all about the context and the behaviour behind the move. Alignment across multiple long-term focused metrics has historically signalled the final innings of a bull run. And the average line is certainly not static at all. It rises rapidly during those exponential phases, and that's why I'm not saying that Bitcoin will top out at exactly $180,000. That's where the average line sits right now, and it reflects a potential top price if price went vertical immediately. But realistically, we aren't there yet. The market is still very uncertain, with lots of consolidation and hesitation at the moment. But the top could end up higher if prices chop sideways before accelerating, or lower if the move happens sooner than expected. So timing matters just as much as price right now. But the key takeaway for me is this: these models don't provide a precise sell number. They give us a zone of confluence, signals that, when aligned, suggest a high probability top environment. Because the goal isn't perfection, it's all about trying to avoid the euphoria or the panic and make decisions based purely on data. And while Bitcoin might not reach $180,000 next week or even by the end of the year, as the cycle progresses and the lines begin converging, particularly if price hugs the average, then we'll be entering a territory where a top is increasingly more likely than not. So, until the signals line up, I'm remaining patient, sticking to the evidence, and trying my best to resist getting swept up in the speculation. So, to wrap things up, the main point I want you to walk away with is that predicting a Bitcoin top isn't about guessing a number. It's about using data that has consistently worked in past cycles. By looking at multiple on-chain and market metrics together, we get a far clearer picture of where the cycle might peak, rather than relying on hype or just gut feeling alone. And what makes this approach even more useful is combining those metrics into a composite average. This gives us a dynamic zone instead of a single target, helping us see where a macro top is likely forming. And like I said, it's not about perfection, it's about spotting the area where multiple signals are starting to converge and then just acting accordingly. And finally, remember, it's not enough for Bitcoin to just hit a certain number on a chart. We need to see the context, like the behavior of the market, the convergence of the metrics, and that classic late cycle euphoria that signals we're in the final stages of the bull run. And while it's not guaranteed that we do see a similar blow-off top like we have in every previous cycle, if it does occur again, we need to be ready before it occurs. Because if you've been around this market long enough, You know it's hard to keep a cool, rational head when the market's going vertical and you feel like a genius. Anyway, I hope you'll find this useful, and I'll catch you guys in the next one. If you're serious about Bitcoin analysis, my full custom indicator suite is now live. Built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.